Last week, we saw the decline in the United States dollar as a result of the weak ISM manufacturing PMI and then the weaker non-farm employment change report, which dragged US dollar lower last week. And then this week is another interesting week in the forex market, in which we have various fundamental lining up for the United States dollar. And last week we saw the Japanese yen, which rally at the end of last week, that is on Friday. It's gained power against most of the currencies last week, and then our anticipating retracement finally started last week. So let's maybe that will continue this week, or JPY will resume its weakness. So this is the weekly forex forecast, and then before we continue with the technical, let's check the fundamental report last week, and then how it affect the market, and then the fundamental report this week, and how it will actually affect the forex market this week. So last week on Monday, we saw the weaker ISM manufacturing PMI report out of the United States dollar, in which comes out lower than expected. Then on Tuesday, the RBA dropped their interest rate report, which comes out as expected there, and then we actually saw the decline in the AUD pairs last week according to this. And then we have the FMC report on Wednesday. The most interesting one happened on Friday. We have the employment change and the unemployment rate out of the United States dollar. So the non-farm employment change comes out negative, which the predictive result is 224k, and then we have disappointing result of 209k, which make US dollar decline towards the end of last week, and it actually make a massive decline right there. And then let's see how it goes this week. Maybe US dollar will continue declining, or there will be some rescue for that particular currency. And on JPY, according to what we saw on the technical last week, we saw the JPY rally at the end of last week. And then this week in the fundamental report on Monday, we have the bounce governor speech. That is the UK Bank of England governor. We have a speech right there on Monday. And then Tuesday, there's not really fundamental on Tuesday, except for the climate count change from the UK. But the volatility will start coming into the market on Wednesday, when we have the the RBA statement and the US dollar CPI report on Wednesday. That is the inflation measure report on Wednesday. And then on Wednesday too, we have Canadian dollar monetary policy report, the overnight rate statement on Wednesday. So let's look forward to that. And the whole market participants are looking forward to this US dollar CPI result. It is very, very important. It will determine the future of US dollar after we have the disappointing non-farm payment report last week. So they are looking forward to the CPI result. Maybe it will continue, it will bring back the confidence in dollar, or dollar will actually lose its confidence and then eventually drag more lower. And on Thursday, we have the core PPI report out of the US dollar too. So something we have to look at, that is the producer price index, the consumer price index, and the producer price index result. So this too is what we have to look at this week in the financial market. And actually we have the unemployment claims out of the US dollar. So the pair we should be looking out for this week is the pounds, US dollar, and the Canadian dollar, because actually we have more volatilities in these particular pairs based on the fundamental reports that are going to be released. And then it's actually looking like we are getting to the risk of sentiment. So because last week we saw the JPY strength at the end of last week, which is actually retracing the June monthly candle close, and some have actually want to finish their retracement at, let's say, the 50% level. That is EUR JPY, and then we still have some that are still going to so let's see, maybe the JPY will continue this trend this week, because it is very important there to know that, because that is a very good probability trade in the JPY. And then let's see how it goes this week. So let's go to the technical analysis and analyze the various markets we have this week. So after the NFP report on Friday, and after the disappointing NFP report last week, Friday, so we saw the decline in the DSY, which the daily candle close massively to the downside, as you can see. And then this is a supply zone rejection. That is, we have the rejection on Thursday, and then we have a massive daily candle close on Friday after the disappointing NFP report. So what is the future of the DSY, that is the dollar? So I'm looking forward for more decline this week, maybe from Monday to Wednesday, and then we might have a rejection maybe after the drop of the CPI news on Wednesday, or we'll break this particular strong support level. So Monday, Tuesday, I'm looking forward for more decline to back to this level, maybe on Monday and Tuesday. So maybe after the release of the CPI news on Friday, then we might actually have a bounce at this level. So who knows, let's see how it goes right there. But what I'm actually looking at is more decline in the DSY next week. And actually, if you have a disappointing CPI and then the PPI report, might have to actually have a break to this a break of this support level, unless maybe some FOMC member now determine that okay, they should have another interest rate hike, which market might actually take into consideration and come to the US dollar rescue. Then we might actually see a upward push right there. And then if you check this, this might actually looks like maybe we are anticipating the head and shoulder at that particular area for the United States dollar to do what, to reject at this level, and then we should have the upward move right there. So let's see how it goes this week. We should be looking at the more weakness in the US dollar, because if we zoom it closely like this, let's zoom it closely. This is a doji candle which signifies reversal at this supply level. As you can see, this is a doji candle. So and then we have this weekly candle close, the last week candle closes below it. So actually we should see another weekly candle closes below this candle, then maybe before we see a rejection at this level, or we might actually see a break of that particular level right there. So having said that, let's check the currency pairs attached to the United States dollar before we go to the other currencies. So the first one I want to take is gold. So with the US dollar weakness technical this week, as we are looking forward for the more weakness in the US dollar, unless we have the CPI report coming to rescue, or the CPI report coming for the rescue. So we are still looking at gold to the upside, because if you check, let's go back to the weekly time frame. Actually, last 2 weeks we closed as a reversal. Last week too, according to the fundamental and all this thing against the US dollar, we still close as a reversal at this level. And if you check this here, this is a valid trend line with the tortoise around this particular area, and then we have the demand area around this particular area, which is still a very strong level, even though in the overall time frame we have something like the triple top at this particular area. So but what matter right now is the price action we are looking at in a short time, that is in the weekly, the daily, and then actually the 4 and 1 hour. And as you can see, we still have the formation of head and shoulder in the gold. If you check the 1 hour time frame, which signifies another reversal right there. So what I'm actually looking at on gold is to the upside. As you can see, we have particular head and shoulder at this area, which signify more reversal to 1952. Actually, if we break this level, then we should be going to 2028 level at that area. And then there's another chart pattern I want us to look at this area, which might actually be like setting a trap if it's actually break that level, or it will actually reject that particular level right there. So let's check this out. As you can see, this particular chart pattern right here, it looks like it has break this to the upside. Let's zoom further. As you can see, this looks like it has been broken to the upside, and then if you take this level very well, we may actually sense a break right there, which means that the gold is setting up for a move to the upside at this particular level. So I'm looking forward for the gold rally to 1952. If you actually break this level, then we might look for the two things might actually happen here, because if you check the market, we have a lot of rally, a lot of range at this particular level. So we might actually see a decline here, or a break of this level back to 2028 at that level. So that's what I'm looking at on gold. So let's check out the GBP US dollar. Last 2 weeks in our weekly forex forecast, we actually talk about this chart pattern right there, and then what we actually saw this week is that we have a break to the upside in that particular pattern, which comes with test and then hit the target right there. Because actually, if you are trading it, this is the target right there. And then I also give out this signal from this area after a series of confirmation that the number one, which is it forms the, okay, let me eliminate this one, on the basis that we've seen something like the head and shoulder here, and then the rejection, and then the retest, the breakout, the test, and then the rejection, which we actually saw that it's this particular take profit last week. So what are we looking at on DU this week? We might actually see a rejection, that is a retracement from here, maybe because this is an area of another area of resistance level right there, and then we have an order to fill at this particular area. And then another thing, we can see that we have a large momentum to the upside, but this one is as a result of the NFP result from the US dollar, disappointing NFP result from the US dollar last week. And then I think we have an order to fill at this particular area. We might actually bring about the retracement in the GBP US dollar. So I'm actually looking at a retracement to this level. If we use the trend line, I'm actually looking for a retracement to this particular level before we actually see a rejection at that particular area. So what I'm looking at is more move to the upside, but any retracement you see to this area and then you see a rejection, should be an opportunity for you to look for a bullish setup to 1.3036. That is what I'm looking at right there. And take note of the Bank of England speech on Monday. It might actually influence this particular currency too. And then you take note of the CPI on Wednesday, but actually Monday, Tuesday, we might actually see a retracement back to this level, and then the rejection might actually comes in at this particular level, and then you might see more move to the upside. That is, but what I'm looking at is a move to the upside from this particular level right here, that is from 127.266. I'm looking for a move to 1.30036, because that's where the opposite effect actually comes into the market. But if I see a move below this trend line level. So I'll believe that we have break this trend line level to the downside. I'm actually looking for a move back to this low. Then we actually foresee a move back to this low of 1.2597, and if it rejects, then we are going back to 1.30036. But if we see another break of this particular level right there, I'm actually coming back to 1.23175. But in a nutshell, my sentiments still remain to the upside. If we see a adjustment to this level, then we actually look for a move to 1.30036, because using this swing low and the swing high and then using the Fibonacci retracement, you see that we actually have a retracement at this level. When the market move to create a new swing high, then we have the rejection at this particular level. So it has reject here. So actually we can see a formation. We can anticipate a formation of a new high right there, but a new high cannot form if we didn't see a retracement, because market don't just move like this, markets move like this. So we might actually see a retracement after this high volatility move to the upside. So we might actually see a retracement here, then a move to 1.30036. So take note of that. So the next pair we want to check is euro US dollar. So euro US dollar too, I'm looking for more move to the upside, and then this is my target area. So this was entered last week, and then we actually hit take profit at a particular level. So let's eliminate this and see to what is going to happen. So here we have indicated this as a support level, and then actually it holds right there. And then if you check this one too, we have the break of this trend line at this area. So we're looking at small move to the upside in the euro, but before then we can have what we call a retracement at the beginning of the week, and then probably a breakout to 1.10641. So any retracement you see in euro USD should be an opportunity for you to buy to 1.10641, where the opposite firm actually comes in right there. But you might actually wait for a retracement move before you go into buy at that level. So which means that the retracement move might last up to this level, up to 1.0900, and from here we might actually see the rejection coming in at that particular. But anything below this level right here, anything below 0.8430, we are not looking to buy euro USD. That is, I might now be anticipating toward for a sell move in that currency pair. So right now the whole bias is to the upside, but we have to look for a retracement move first, and then see a rejection in the 4-hour time frame, then actually buy to 1.10641. And if you buy from here and take profit from it, like you have like all close to 80 to 100 pips right there. So the next pair I want to check is AUD US dollar. If you check AUD US dollar in the 4-hour time frames, it has actually created something we call the head and shoulder, and then subsequently it creates a double bottom right here if you zoom further, which means that we might actually have more moves to the upside in the AUD US dollar. So what I'm looking at right there is maybe we might have some retracement here, and then a more volatile move to 0.68005 right there. So that's what I'm looking at on AUD USD. So any retracement you see here, which is still above this level of 0.65973, is an opportunity for you to look for a rejection, and then a move to 0.6803, and then the buy will be invalidated if we actually see a volatile move that break this particular support level. So I'm looking to buy this particular pair. As you can see, we have something which might actually make the AUD JPY retrace for some while. We might actually see the retracement to this particular level, then a high momentum or a volatile break to the upside, which might actually last till 0.68005 before an opposite to say FM actually comes in at that particular level. So let's say it goes on AUD. So the next way we want to check is SND. SND to last week we indicate this, and then we have 3 confirmation here. We have HS, HNS. We have the break of this trend line and a retest, and then we actually have a rejection right there last week. So we should be looking at more move to the upside this week. So here we've break this level. As you can see, we've break this level at this particular area. So we might actually look for a retest, or we might actually see a deep retest to this particular level before the rejection of that level to 0.28 0.62893. So what I'm looking at on SND USD is small move to the upside. I will actually have a small retracement, and then maybe to this area, and then actually have a rejection to 0.62949. And if you break this level, you might actually be going to 0.63 725. Let's go to the US dollar JPY. As you can see, this is a very deep retracement. As I said last couple of weeks, that watch out for the JPY retracement. And if you check the last month candle, you might actually see that the US dollar is actually at let's say the 50% Fibonacci retracement level of the June candle close. So let's zoom further and see how it goes right there. So it's actually at the 50% fib level. So here we should actually be waiting for a rejection or more. Let's fit in. Yeah, I'm actually waiting for a rejection at this particular area for the JPY to continue its weakness. And then if we didn't see any rejection at this area of at this particular area, so we should be looking at more move to the downside on US dollar Japanese yen. But I'm anticipating a rejection at this area of value right here. As you can see, I'm anticipating a rejection at this particular area because the whole directional bias is to the upside. And then if you actually use a trend line right there, I'm going to force it. If you use a trend line right there, you might actually see that this trend line has been broken, but this is a trend line against the trend, so you don't trust it, so you remove it right there. So but we'll wait for the market at this area of value right here, which means that this demand level or that this demand level or this particular level right there, this is where we are waiting for this support level. And if you have a break into that area, so it means that the market is coming to the 100% fib level, then we might actually be looking for more. But this retracement is not to be trading again, because we have already anticipated the retracement last week, and then I took some last week and I took my profit around this particular area because I know that the June candle close will retrace in the JPY. So the next one that you can still have the opportunity to trade is the AUD Japanese yen. In the AUD Japanese yen, we still have the opportunity to trade the retracement to this particular level of 92696, because if we use the fib retracement with the swing low and the swing high, actually this one might anticipate the rejection to this 61.8 Fibonacci retracement level before we actually see maybe a decline from that level right there. So let's see how it goes, and then actually might use the trend line to determine where the retracement might be over right here. So actually we are waiting for a rejection at this level of 61.8 Fibonacci retracement level, then to the upside. So that's what we are looking at right here. So let's see how it goes on so you can still take the advantage of this opportunity, because this is a daily time frame, so you can still take the advantage of this opportunity and then to look for a bearish move to this level of this level right there. And then your safe zone will actually be, let's use the trend line for the safe zone. This might actually be the safe zone, which means that your stop loss might actually be above this particular resistance level. That is at this market level, your stop loss might actually be here, and then maybe we see a little retracement, then a move to this level. So this week JPY might actually rally throughout this week, and then it might take rejection, maybe become weaker next week. So let's say it goes right there, or at the end of next this week you might see a rejection at that particular area to the upside. But if you want to be conservative, so you should wait for this level right there for you to buy the rejection of this currency. So let's go to the GBP JPY. This GBP JPY still have more potential to the downside. Checking the monthly time frame, you see that this one just start to retrace. We still have a very long way to go in the GBP JPY, and then market can actually surprise you right there. So above this particular monthly candle, I'm not willing to trade the GBP USD, but if it's still below it, then I'm still on it. So yeah, this is our safe zone right there. The stop loss is high, but you have to use a minimal lot size, and this is the safe zone right there. Anything above this level, I'm not willing to sell GBP JPY. But if it's still below this level, because we have various candle close below this particular level, especially in this daily time frame right here, and then we have a reversal move here. So I'm still looking for a more move to this particular level right here, or to this 78.6 Fibonacci retracement level right there before any upside move in the GBP US dollar. Subsequently, we can actually use a trend line to determine where this might actually end right here. And if you check, it might actually end at the 50% Fibonacci retracement, and they will look for an upside move from this level. So I'm still anticipating a sell in the GBP JPY. In the Swiss franc JPY too, I'm still anticipating a sell after it closed below this particular level last week. I'm still anticipating a sell to this level right there. So let's indicate the levels and the demand level at this area. So yeah, I'm still anticipating a sell to this level, guys, because the buyers has lose their momentum here. As you can see, the buyers has actually lose their momentum here, and the sellers are coming in gradually. So here we might actually see a move to this area before buyers now comes in fully, or this 155050. But first thing this week is I'm selling CHF JPY, and then my stop loss will be at above this this week buyers right there. Then I'm actually looking for a move to 15043. If you break this level, looking for a move to 155050. And then yeah, if you actually use the trend line to actually see where the opposite effect might actually comes in at that level. So let's see how it goes right there. Let me use the trend line to one. I'm actually use this, and then this two is more valid. So actually you might eliminate this and use this, but you have to be very careful when the market gets to this demand level of 15743, because anything can actually happen at this particular area, which might drag the pair to the upside. Let's check pounds CHF, and this is one of the analysis right here. So here we have a rejection here, and then we have a rejection at this particular area too. We have a rejection here, we have a rejection here, and then what we are looking at is a more move to the upside. And then what I'm actually looking at on this page, if you check the 4-hour time frame, my next anticipated move is 1.15434, because we have something like the channels here, the break of the trend line, and we actually saw this as a retest, but it didn't come back to this level right there. So any retracement you see is an opportunity for you to look for a bullish move to 1.15434 on CHF. So if the price is still above this level, I'm still willing to buy CHF. So this just creates a range here on Friday. So actually we are looking for a bullish move to 1.15434 on that particular currency. And then the AUD Swiss franc, the overall time frame signaling what we call the downside, but on a short term basis I'm willing to buy AUD Swiss franc to one of the levels right there. So if you check it, you see that we have a high and then we have a low at this particular area. So we might actually see a move to this area, and then we might actually see a decline at this particular level. But first, what I'm looking to do here is to buy AUD Swiss franc from this level after creating a double bottom right there, and then I actually take my profit at one of this level, and I'm actually use a fib retracement to take my profit at that level. As you can see, I actually take my profit at this 50% Fibonacci retracement level. Maybe I might actually see an opposite effect at that level, which might actually resume to trend to the downside. But from Monday, I'm willing to go long on the AUD Swiss franc, and my bias will change if I see a close below this level. If I see a close below this particular level, then it means that my bias has already changed. And then on this, we might actually see a retracement here, which might actually make it form head and shoulder, and a rejection to the upside, which I might actually take my profit at this level. So you should watch out that particular area too, which you might use in taking your own profit. And then you might look in entry this at this particular level, and then because we have a rejection here, we might actually look for a head and shoulder, and then a rejection to that level right there, as you can see. And then the last pair we want to check is the US dollar Canadian dollar. As you can see, we have the US dollar card rally at the beginning of last week, which makes it break this area. We actually entered the signal, but it hit our stop loss so early, and then it's moved up massively. Apologies for that. And then that is markets doing anyway to that sometime. So what we'll actually be looking at after this reversal at this supply level that is sitting down at this area. So I'm looking at more move to the upside to the downside, and the reason being that if we check this zone is a very strong resistance zone, which market breaks and then reject at this level. So what I'm looking at is a more move to the downside at that level. And then before you can anticipate that, we can, if we see a break of this trend line, then we should be looking for more move to the downside. But if we see a rejection here, and then we'll see maybe another daily candle close with bullish, then we should be looking at the move to the upside. So that was what I'm looking at. So this is the weekly forex forecast, and don't forget to like, subscribe, and then share the video for the for your last one. So we have the link to the broker, to our verified and then legit broker in the description box, and then the link to the verified pro firm in the description box, so you can actually click on it and register and then trade. So don't forget to trade safely, and don't forget to use your protective stop loss. Have a good trading week.